Hello, everybody. Welcome again to another episode of Creative Minds, my favorite time of the week. Glad to see you guys both with us again. How's everything been going?
Oh man, everything's good, man. Another week down, man. Some exciting news with certain exchanges and the crypto world. Yeah, it's exciting.
Good to see you again, Emilio. Gerard,
Appreciate
how's
it.
it going,
That
sir?
work.
Yeah, no, I'm doing really well. Thank you again. Thank you for for passing the baton. It's been a very good week. Really interesting things happening in the crypto space. So I am glad to be here again to chat about, what's going on and where potentially the future might be, at or what we should be looking at.
Yeah, so we had a lot of crypto news this week. We had Bitcoin going up and down, of course, and then we had the big crypto convention down in Miami. So
Yeah.
everything was looking good, and then a lot of regulation was talked about again. A lot of big banks kind of sneaking in, pointing the finger at certain people for giving out, hey, you're giving out a lot of interest. So it's just kind of like the Wild West right now.
Yeah.
So a lot of changes coming down, a lot of new regulation being looked at, and then new updates being added to all of the exchanges, making more fairer rates for everybody across the board. Draw, I know you kind of looked into that convention as well. What you see that kind of piqued your interest?
Yeah, I think the convention is actually in itself a statement that the crypto space is trying to make. In the fact that we are here to stay, and the crypto is actually, from my perspective, as I had said before, it's here to stay. We are at the infancy of a revolution, right? We could also hear from some of the keynote speeches. One that really caught my mind, or one that caught my attention, was the one by Mr. Wonderful,
Hmm.
right? From the famous Shark Tank.
Shark
Uh,
Tank, yeah.
the one that he did made it, clean and clear. I wish I could quote the speech, but it was a lengthy one. But just to summarize it, he basically said that crypto is here to stay, and the people that are in right now are in at the very right time because it's still very early and it's not late for anyone to kind of like jump in and be on the bandwagon. But you just again, from my point of view, you just have to be careful because there are always rock pools. But that doesn't mean that we are not in for a good ride.
Hmm.
Crypto.com or crypto space or currency as a whole is here to stay. So I'm excited for what's going to happen. And Miami is definitely taking the center of being one of the primary destinations of crypto.com or a crypto space in the US.
Yeah. I saw when it was out there that a lot of the new regulations, that at least the city of Miami or Florida is one of the best places to be in if you want to, enjoy crypto. Right? There's even talks of them turning people's paychecks. You get paid in actual, a stable coin, and
Yeah,
it's not actually fiat or nothing like that. It just goes
Yeah,
to your account. A lot of regulation I saw with Celcius was out there. Celsius is another crypto exchange, kind of like similar to crypto.com, but basically you would stake your cryptocurrency over there. Like your Bitcoin, Ethereum, your ADA, Polygon, Matic, all the stuff you can stake over there, and then they'll basically lend you a sum of money equivalent to what you staked on there. You could, and it'll probably be like USDC or straight fiat, and then they allow you to be able to basically do whatever you want with that money. And then if that you don't pay your loan back, you basically don't get your crypto back. So that's kind of how they is. But they offer very competitive rates over there. Anywhere upwards from 10 to 12% APR, kind of similar to crypto.com. But
and then they also have the FTX arena, I believe, too, also, which is another exchange that they have, which is almost the same as what we have here in the crypto arena. So they have the other one, the of FTX, and as you can see, uh, the how it's really moving into a everyday thing. It's becoming a boom, if you really want to call it. This is, how they had the baby boom, well, this is the
mm-hmm.
crypto boom, honestly. So when you look at arenas, you look at what crypto.com is doing with the NFTs now, with they have their own space, and it makes it better for you to even kind of like get into the NFT world if you're kind of fairly new, which is what I'm still new in it, still understanding and still looking into that. So I mean, it's pretty exciting with all this stuff that's going on. And that convention, what helps is for people to understand what's really going on and what's going to be more for the future. So that's the good thing about this convention, which I'm sure they're going to have every year.
Mm.
Yeah, absolutely. And it wasn't just regular Joe Schmoes out there, who got a couple of got a couple coins sitting in a wallet. These were like big investors, like you said, Mr. Wonderful. All those folks were out there looking
Yeah.
at these events,
Mhm.
and then maybe some things people didn't notice that a lot of insurance companies are out there now as well, looking to provide some type of FDIC equivalent insurance to these exchanges, because you can insure the stable coins versus the crypto on there. So that's what if big money is putting their money somewhere, they want to make sure it's safe from exploits or rug pulls or anything like that.
Yeah.
So it's a lot of good things coming out of this, and a lot of money being looked into. So crypto is the future, y'all. So it
Yeah.
is happening. Um,
Couldn't agree anymore.
yeah,
That's
it's gonna be a great move. But there were also some things in there that we noticed under the table, like with Celcius, for example. And I like Celcius, it's a good platform. I just kind of moved on to crypto.com. But I did notice later that they're saying after April 15th, they're not going to allow any newer investors who are not accredited investors. And to become an accredited investor, you have to have at least net annual income of $200,000 or more, or a net worth of at least $1 million to become an accredited investor in order to stake and earn interest on the platform. So that's kind of like a disappointment, because they're kind of locking people out. And that and the reason why people do that is just so they can keep like certain platforms from highly shifting from regular, from a large amount of people who are smaller investors from fluctuating the price heavily or anything like that. So
Make
it
kind of
kind of
sense in the past.
yeah, it's kind of you got to kind of take it with a grain of salt when stuff like that
yeah.
happens. But
Yeah.
it is a good platform. Celsius isn't the only one, thank goodness. You can use the other exchanges to earn interest, but that
Yeah.
is kind of messed
Yeah.
up that's going
Hmm.
on.
I think it is. I mean, one thing that I would say to our audience, our viewers, the average Joes like ourselves, is that there are more than one exchanges, right, that are out there.
Mm,
So this is one, crypto.com is another. Again, there are multiple places that one can start. So
mm,
you are gonna have some of these exchanges or platforms that are going to instill their requirements, which they have every right to do. But
mm,
average person, if you have your $10 or $20 or your $100 and you want to
mm,
buy a coin, there are other places that you can go to. Again, just look elsewhere, and most importantly, just be careful with which coins that you buy or where exactly you put your transactions, because there are rug pulls. Again, rug pulls are situations where the platform can just shut down and there's nothing else, no way for you to get your money back or get your investment or coins back, or your coin just disappears again from the exchange. Those things have happened, and they might still happen. So just be careful and be able to look out there. There are more than 8,000, way too many,
mm,
for us talking about. So there's going to be a few that are going to survive. That's just all that I have to say, and just pick
mm.
from.
And just saying before we get to our next topic, the SEC is starting to look at a lot more of these crypto exchanges, because I know that they see that, like, y'all are giving out 10-12% APR and you're still profitable. Like, what's going
Yeah.
on? So I noticed they're probably putting the hammer down, like saying,
Mm.
hey, look, all these banks are giving out this amount. What makes y'all have enough money and leftover money in order to pay these type of rates out? And even the banks, I'm sure that they're probably like, hey, I can't even get close to being competitive. I got 15 yachts I'm trying to support right now. I can't be giving nobody 10%.
Yeah.
So,
I can just piggyback just slightly, Brian,
mm,
that you mentioned, right? When banks are saying, hey, guys, on the crypto space, I
mm,
can give 12% and 16%, right? The
mm,
interest, I think it boils down to the World Wide Web, how connected
mm.
these platforms are. There is way less overhead,
Yeah.
cost of operating a bank. It
Oh, yeah.
very, very, very high compared to having an online platform that probably have like just a few handful of developers sitting
Hmm.
some with some machines on a server farm somewhere, and they're operating the whole operation, right?
Yeah.
Right out of nowhere. They don't
Mm.
need to have an office or headquarters in multiple locations as some of these banks are. So you can have just one or two, you know, Joe and Jim sitting out somewhere in Miami, and they're operating from every single state in the US. Really bothered about, oh, we don't have to pay rent, or we don't have to pay mortgage, or we don't have to pay, security or overhead fees. So
Mm-hmm.
that
Yeah.
explains why banks such as Ally Bank that are online
Yeah.
even better interest rates than the average bank that
Mm.
is a brick and mortar. So that just tells like the future really needs, it's kind of showing and telling where people are navigating to. So that's
Mm.
why crypto is here to stay.
Yep, and I agree. I totally agree with you. Like, if you think about the newer banks that are come out, they don't have like you know how like Chase, J.P. Morgan Chase, Bank of America have millions of not millions but hundreds of institutions all over the world where you can literally walk
Mm-hmm,
in and do
mm-hmm,
your business there in the banks. Newer banks like Ally, SoFi, they're all online, and they got people working that you can contact, but they're sitting at home in their slippers, taking care of your
Hmm.
any troubles that you're having with your banks, any
Yeah.
transfers, any withdrawals, all
yeah.
that, is making loans, all that right there from your house. All you got to do is have an internet, and that's
Mm-hmm,
it.
yeah.
Yeah, and then we gotta look at it from even from the beginning, from the jump, from the start, from when the J.P. Morgan started, back in the 1800s and all that. We look at how the bank system kind of like worked, and I think I talked about a little bit over about it in one of our podcasts. Is where, you had several banks that were all worked as by themselves. You know what I mean? The individual banks around the country. So their dollar was it's the same thing as crypto right now. You have like your polygons, you have your Shibas, you have your Ethereum, you have and so forth. They're all their own coin. So you own one coin. It's the same thing with how the banks used to work. They had their own banks. You know what I mean? They had their own currency. They looked a certain way. You already know that you got this from this specific bank at a specific state. You know what I mean? So and it ended up becoming the reserve how it is now, where it's all one. You know what I mean? So every dollar is the same. So it's the same thing, but we're looking at it now is a generation change now. So it's like from back then to now to where it is to what is going into the crypto space. With the coin. So now they're looking at this. You know what I mean? They learned from the beginning where all these individual banks is better to have it all under one umbrella. You get what I'm saying? They all work together, but it's only one umbrella. But now it's going back to how it really started. When they say that history repeats itself, it does repeat itself, but it's repeating in a way that we are going along with the change as technology advances. So when we look at it, the banks now they don't want to stay behind. So that's what's going on right now. So all this Miami stuff, what was happening in the convention and stuff like that, you for sure you're gonna have like the big heads of different banks learning exactly what is it that they're talking about. You know what I mean, from the mouth, right directly. If they want to ask, they have a seat where they can ask. Whoever it is they need to ask. Now, what's gonna happen within the next 2 years? That's where we're gonna see the changes at. How where the similarities are going to be that the banks are going to come up with, because now something that I was watching is, and I know I'm going off topic, but it goes with the same. It's like when Coca-Cola came about. Later on came Pepsi. Now Pepsi said, "Hey, you know what, Coke? I don't think Coca-Cola has a better tasting product than I do." So what did they do? They went out and they made a challenge. They had people, with their, they couldn't see what they were tasting. They taste both of them. Tell me which one tastes better. Pepsi ended up having a higher percentage. So how does this come? What I'm talking about is competition. So overall, it's competition. You know what I mean? So now, as the banks see the crypto space as a competition, now they got to see how can they adapt to it, because they know they're not going to win. So that's where we're at right now, and that's the beauty of it. And then another beauty of what we're talking about, like the coins and the exchanges. Now we look at Robinhood right now. They're not trying to be left behind either. Now they open up I believe three different coins now. So now they have a Compound, they have Shiba, and I believe Polygon. So now you can trade these in that platform, where back then it was only a few altcoins that you were able to do. So that you look at these markets, and all they're trying to do is really follow certain trends that are making money, of course, but at the same time they're trying to adapt to change for the future. You know what I mean? And that's what we're all basically doing. Even that we're, your average Joe just trying to learn. It's trying to adapt. Adapt. So 'cause we have so much things going on in our lives. Of course, it becomes a little bit hard sometimes. But even as long as you make your five minutes, or even this 30-minute time that you have it with our program, is like it should help you out somehow one way or another. It should be no reason that you guys can't get something out of this whole 30 minutes. You know what I mean?
Yep. Amelia, just to piggyback off what you're saying, that competition is being bred right now between the exchanges and the banks. That just is going to breed in more innovation, more faster ways of doing things, and then better interest rates for just a regular day-to-day person, because we definitely are not getting what we deserve,
Yeah.
especially with the rate of inflation. Our money,
Right.
we need to be making it work, or some type of passive income. It can't be just giving us, you know, 5 cent or 45 cent a year. It's just,
Yeah.
That
anything?
if they that if they don't lend you, some fees,
Yeah,
it's going to just wipe out the interest rate even, and even
yeah,
you paying even more to the
yeah.
bank.
And then got the nerve to charge you a checking account fee.
Right. If you don't have like a certain amount coming into your account, now
Right.
you got to pay those extra $6 to $12. You know what I
Yeah.
mean? Yeah, it's crazy, man. When it should be free. We
Yeah.
already
Shit.
got you get it. They're already making money somewhere else with our
Yeah.
own money. Why don't you let us have it free, man? If we don't have that direct deposit,
Yeah, I'd be like, well, don't even give me the interest then if you're gonna charge me for
Yeah.
the account. You
Exactly.
didn't give me
Exactly.
anything anyway.
Yeah. Exactly.
Absolutely.
So you guys, we're gonna take a quick break just before we get into our final topic. So bear with us. We just got to get our sponsorships going. We'll see you guys in a few moments. Hey, you guys, welcome back to our final segment of our show. So now we're going to kind of change it up. So in line with what we're talking about with the SEC, banks kind of making the crypto exchanges kind of just. I know in our previous videos we did explain about the staking on Crypto.com and some of the other platforms, but just like anything else, the interest rates aren't going to stay at those high levels forever. So Crypto.com recently just had a couple updates to that platform as far as staking and the rewards and certain APRs for all the coins and the stable coins that you can make. So I'm gonna share that with you guys live, just so you guys, in case you see our earlier videos, and then you can see the updates from what is taking place now. So as far as the credit cards for Crypto.com, still the same rewards. Nothing has changed as far as the reward tiers and how much you need stake for each individual card. So again, you get the Midnight Blue on here, you get the 1% on all your cash back, and then the Ruby Steel here, 400. Can you guys see this? I just want to make sure it's still pretty big on you guys' screen.
Yep, it looks.
And then you got the Royal Indigo. You're still getting 3%. You got to have at least $4,000 worth of Crow stake, and then of course the Icy White and the Obsidian 40,000 and 400,000. Still 5%, 8%. You aren't gonna find credit card rates, any type of debit cards anywhere on the market that are beating Crypto.com. These are the creme de la creme. Probably the only thing you're gonna see next to this is the Coinbase card, and I think they're maybe 4% or 3%, something like that. The card benefits are still the same. Nothing's really changed. You still get your Spotify, Netflix, Prime, your Expedia, all those different tiers right there. And then as far as the actual earn rates, if you're going to stake like USDC or anything like that on the platform, it's now they've updated it from 8% to just a regular tier to at least like 4% now. So everything is a max out. If you're gonna lock your money on the platform for 3 months, you're gonna get 4%, and then 1 month 2%, and then if you just want to do a no lockup, it'll be just straight 1% along the way. So the terms, the high APR 10%, that's kind of gone from crypto.com, and that's kind of everybody getting into regular. Hey, we can't be giving out all this interest. A lot of fees.
Yeah.
SEC probably looking like, hey, where you guys getting all this money from? These kind of things happens. It's just adjustable. And these rewards were there since the beginning. They've been like this for at least 4 years. Crypto.com has held on to be the longest out of everybody.
Yeah.
And they're kind of online with what Coinbase is giving, Coinbase, Binance. So if you guys go check out those sites, I'll link these in the description for our platform so you guys can see these things as well. Gerard, what do you guys think about these changes? I mean, are they kind of justified,
Yeah. I believe that just as much as there's quite a lot of interest and traction going up in the crypto space, the institutions and exchanges like Crypto.com, they have to keep the innovation going.
Yeah.
I think they are they are working against a time frame or against people or consumers that are very, very sophisticated right now. You have consumers that understand how the market works, that understand how the World Wide Web works, how the Web 3.0 works. So you do have a generation that is very accessible, and that is also that has access, right, to all these technologies and all these platforms and all this information, right? So all this information is out there, so people are able to run comparisons. People are able to make better and informed choices. So it's just a matter of the likes of Crypto.com staying ahead of the competition and making sure that they are really satisfying their customer base, because every average person that is putting their money into crypto.com, I am pretty sure that they definitely understand how potentially buying stocks and trading at the very basic works. So there are so many platforms that are coming out now that are even more sophisticated, that are very way much more simpler. So they not only have to simplify the platform, but they also have to make it more attractive and more profitable, at the same time. So it's almost like a double-edged sword or a triple challenge, right, for them. So I props to the platform as they keep the innovation going. They provide good benefits. Again, it doesn't hurt having a card that gives you free internet or that gives you free Netflix if you're able to get to that tier, or even other, rewards that the regular credit cards are giving. With the crypto.com card, you are able to get even more if you're able to kind of stake your coins and be able to, put your investment where exactly you can afford to. So it's always have those comparisons and take advantage if you
Yeah,
can.
yeah. Good thing you said that, because that was one of my main topics I was going to say, which is the differences, with the credit cards and the banks. And what this has is, it has two different things, two components to having to stake your coin. Is one is you're going to get your interest rate, a higher interest rate, and then your second, you get perks for this too. So when we talk about perks, it's almost like when when you go to get a phone at certain stuff, certain place like I forgot the name of it. Not T-Mobile, but it's like a smaller version of the T-Mobile. They own it. When you go and get this phone, I think they give you like Netflix for like 3 months or something like that. But now, see, that's a perk. That's how they get you to kind of go out there and go ahead and start the service with them. So the same thing with the crypto.com is, what I like is the perks that they give you alongside the interest rate. So now you were talking about Spotify, which is something that we heavily use. I believe I do. Spotify is pretty great. You know what I mean? So if they're telling you that you're going to stake it and they're going to pay for your that sounds pretty good to me. You know what I mean? So those perks sounds good. When you talk about Netflix, which is now it moved up to like $15, or something like that, 15, $16. I don't even know. I just know it went more, it went higher. Now if they're telling you that you stake your money, just like how you said, whatever you're comfortable with to be able to stake with, you get a percentage and you get that perk.
Yeah.
Yep.
So that's dope.
You guys, I just want to show you all exactly, just so we always have proofs for receipts for all the things. This is crypto.com's updated tables for all their tiers and everything. So like, again, if you want to see what you're going to be making as far as whatever money you have staked, USDC, you can just put it in this little calculator, 1 month term, and you can see what type of interest you guys are going to be getting. You can compare the token rewards for what you're going to be getting on a weekly basis, depending on what you have staked. You can go from 1 month all the way up to 3, and it'll show you the rate of return that you're going to get now. So that's the new updated tables, flexible, you'll be able to take your money out at any time. So, just always just do your research before you guys decide to invest in this. But again, even if it is turning into 1.5, you're beating your bank by a mile.
Yeah.
You're not going to find competitive rates like this unless you're in the stock market. So your bank still is not doing anything.
Yeah.
That's just my 2 cents.
Yeah, even the stock market, right? The average rate of return, right, for most of the stocks actually range institutionally around 9, 10, 11.
Yeah.
So that's kind of like the interest, that you're getting at, potentially annually. So the crypto.com is basically at a very good start. The stock market has been there for years, right? And if you're able to make 8, 9, 10, 11, or 12%, on the stock market, but if you come to crypto.com and you're able to make 12% at this early stage, again, I think it's a good competition, and you just have to be careful, right? Which stocks, which currency or which coins you buy, or which exchanges you are dealing with, because all exchanges and coins are not the same.
Yep. And Drew, just to piggyback on what you said, the stocks, stock market, like we talked about the SPY, even, the past 2 years were rough, still ended at a rate of 10% at least,
Exactly.
even through COVID, So those exchanges, and the S&P 500, the SPY, you would make at least 10%. Right.
Right.
So I'm just going to check. So we kind of got through all of our topics. Do we got any questions at all? Let's see. Emilio, you want to run that one?
Yeah. Does the crypto regulation protect my crypto coins? I will say no. It doesn't. Yeah, no.
Yeah, so the only thing the regulation is kind of going to protect you now, or at least going to hope, is some type of FDIC equivalent insurance, and that'll protect you against, if you've been watching the DeFi space like I've been doing, it's been a lot of rug pulls, and now they're trying to reword it into exploits, and so that's that's what they're calling it now. It's kind of like the new little buzzword over there. The exploits, and then that's how we're hoping to be able to get some type of insurance, because the exploit is down to the platform at that point. If the coin just rugs or the coin fails, then that's not the platform's fault. It's just like a stock just bottoming out to zero. That's not on the platform. So they're trying to come up with verbiage in order to separate. Hey, what's a rug pull? A rug pull is usually, hey, one person taking all the money out, stealing it, versus an exploit, something wrong with the platform.
Yeah.
So,
and we have a whole segment on that too, with the rug pull. So go ahead and check out one of our last podcast, just to kind of get understanding what a rug pull is. And it's basically what you just said right now too. And another thing that I said too, that check it out on Netflix, they talk about a rug pull also with the whole company. The guy died, you know what I mean? So they can't find him. So the whole company just went back to zero. So whoever had money in there just they completely lost. And the guy that was speaking there, he had about almost $500,000 in there. So that's a lot. Think about that. So, that's a big ass rug pull for him. You know what I mean? So so we got to be careful. So anything that you want to start something, invest in something new, just go ahead and just put like $10, at least, or something. Whatever it is that you comfortable with losing, of course. That's that.
Just to piggyback on what you guys are saying, I just wanted to draw a similarity, right, between the coins and the exchange versus the actual currency in real life as well as the bank. So the crypto coin is very similar to any currency that we are looking at, whether it's US dollars, France CFA, pesos. So these are currencies, right? That you can go and you can hold your assets in that currency. If that currency disappears tomorrow, are you going to go ask your government to pay you back? Probably your money or the notes that you have stashed up somewhere are useless, right? It's the same thing with the coins. If the coins disappear, there's no way that the government can help you with the regulation. But if an exchange was to pull a rock pool, was to just poof and disappear the next day, maybe at that point the government can say, hey, you have to be able to cough out every single money that you collected from these folks. It's the same thing as if you have your pesos or your US dollars in a bank
Mm.
and that money disappears. Now, the FDCI or the government can say, hey, bank of wherever, you need to, you know, get all that money to all these
Mm.
people that were banking here. So
Mm.
I just wanted to draw that, correlation so that anybody can have a visual of what these two look like and be able to understand why the regulation doesn't really protect your coin. You want to be able to just be careful of the coins you invest in, be careful of the exchanges you buy or you have your assets on. That way, if anything happens, then you know best, what the next course of action would be.
Oh yeah. Well
Yeah.
said, right?
Yeah, I know, and
Yeah,
actually,
yeah.
so a crazy story
I
about
heard.
that too. I'm not sure if y'all heard about this one, but a rug pull. India went through this at a point. I forgot what year it was recently too, where India was getting a lot of counterfeited dollars right there. So I think they had like a specific rupee that was like I think like 1,000 or something like that, like a bill that was like 1,000. So all these rupees that were there were fakes circulating around the whole country, and it was
Wow.
so much that it became a big issue in India. So what the I'm not sure what they call prime minister or the
Mm-hmm.
you know
Yeah, the prime minister.
president, yeah, prime minister, right? So he decided to cut all of these bills and cut it off circulation from all of India, and that's exactly what they did. Through his whole team, they said, you know what? So as of whatever day, I think it was like as of today, if you have $1,000, a thousand rupee bill, it's not gonna work no more. And he
About
just cut it off like that. So it's almost like a rug pull. You know what I mean?
yeah,
When you think about it in India, that means that if I have a gang of bills that are $100 bills and I have them, and all of a sudden Biden says, hey, you know what? As of today, these $100 bills have no value in the United States.
that's it.
Now what happens? So I'm gonna be stuck with this whole money. So that's what a rug pull is. You have nothing. You think you have your coin.
Mm.
Once whatever exchange or whatever had is gone, you don't have nothing anymore. So India went to that in real life, and that's crazy to even think about such a big country. You know what I mean? But the same thing happened. It was just so much fake money going in circulation that they had to cut it off, and that was the one way to cut it off.
Yeah,
But I mean, it hurted some people gain, whatever, the case might be. But yeah, that's
yeah,
true story on that.
That's crazy. Real life rug pull
yeah.
Yeah.
with fiat.
Yeah.
And I think there have been, situations even within the US where whenever a particular, group of banknotes are supposed to retire, normally I think what happens is that the federal government actually makes an announcement to let anybody that is holding that specific note that as of a particular day that note is not going to be anymore allowed in circulation or it won't hold any value. If you have it, you need to go back to the bank and make sure that it's exchanged for a different note or or the value of your money is switched to something else. So that's also another way of curbing, fraud or curbing, any fake counterfeit. Because if you have those notes and they're counterfeit, you're not gonna pass anywhere near a bank to like
Mm.
switch it or
Yeah.
other they are gonna hold you and you might not leave that bank anymore. So
Yeah.
that's that way of cleaning the system and making sure that everything is proper, that's in circulation. And that
Yeah.
might be with coins anytime from now. You just have to be careful. of which to hold.
And just to piggyback one last thing, same thing's kind of happening to us right now with our coins. Like any of your change that you got lying around, like most places are not accepting like change anymore. They're not even most places aren't even accepting regular cash. Everything had come in with a debit or credit card in order to make a purchase. Like the coins are used as far as put them inside of the Coinstar machines now, or you roll them up and give them to the bank. But that's getting them out of circulation, so everything
Right.
can be digital. So it's kind of
Yeah.
something that's out of style. Innovation.
Yeah.
Going digital.
That's right.
So you guys, we are kind of running over our time, but this has been a quick video. Felt like it went by super quick. Again, always do your research, you guys, and thank you again for joining us on another episode. Miller, you got anything you want to say to the
No.
crowd?
Just thank you very much. To everybody who returned to watch us, and thank you if you are new to this channel, please subscribe. Hope smash that button, and we appreciate every single one of you guys. You know what I mean? We're going for the long run, just like how we put our coins. It's a long run. It's nothing short. And just hope to see you on the next one next week.
Thanks much, Emilio.
Yeah.
Gerard, what you got for us here?
Just echoing the same thing as Emilio, thanking the audience. Thank you for coming back, and to the new folks, thank you. We are here to learn. We are here to share our experiences. So if there's any comments or any feedback you have, leave it in the comment box below. Let us know what you think. And always, share the video, hit the notification bell. Let us know, so that if we have our next episode, you are going to be notified, so that you can be able to join us. Until then, thank you for being here, and looking forward to sharing another couple of good moments with you all.
Absolutely. Thank you, Sarah. All right, everybody. It's been another episode of Creative Minds. Thank you guys for coming to join us, and we'll see you guys next week. Take care.
Yeah. Peace.
Peace.